If you're looking to add gold to your portfolio, should you be doing it with the physical bullion or should you be looking to the mining stocks? My guest today on StansberryInvestor.com is Chris Mancini, analyst over at Gabelli Funds. Gabelli has over $33 billion under management, of which $2 billion is allocated to precious metals. Chris, welcome back to StansberryInvestor.com. Good to see you.
Thanks, Daniela. Good to see you. Thanks for having me.
Yeah, absolutely. So I want to talk gold versus the mining stocks with you today. Obviously, this is your area of expertise. I was just looking at the charts earlier, and if I look at the GDX in a 3-month period, we're up more than 6%. The GLD flat during the same period. Perhaps that answers the question here. But what's the better play these days?
Yeah, I think it is. If you want gold exposure, the way to get it is through the miners currently. And like you said, we've seen that over the past 3 months. The company's reporting earnings now. What we're seeing is very strong free cash flow. The companies are growing, and they're growing organically, and they're cheap. So that's really the way to get it. I think the market, if the gold price stays here, it goes higher. The market's going to start to realize that gold miners, gold mining stocks are good investments.
So when you're talking that they're good investments, are you talking the juniors, the mid-tiers, or the major players here?
Well, they all have different risk reward skews, but they're all, if you, again, this is all a caveat on is the gold price. If you want to play gold, right? So if the gold price goes down, a junior miner right now is not, or a development stage company is not a good investment because it's going to be hard for them to get financing to build their mine. But if you're playing for a higher gold price or the gold price even to stay where it is, they're all good investments actually, but they have different risk reward skews. So a development stage company is obviously riskier than a production company, than a single asset production company. Single asset's riskier than a multi-asset production company. So, but they're all good investments if you think the gold price is going to stay here or go higher.
Interesting. Now, we've done various interviews throughout the year, Chris. Do you think that the mining sector today is much healthier than we were, let's say, 3-5 years ago? Have they cleaned up their act, especially in the junior and the mid-tier space?
Yeah, they definitely have. I mean, just across the board, where they're focusing on organic growth, they're focusing on free cash flow generation, return of capital to shareholders. And so, what I also find interesting is that because it was in such bad shape, the mining sector was in such bad shape for so long, that they really didn't have the opportunity or the capital really to spend on exploration, including near mine exploration over the past decade. And they're starting to do that now. So we're starting to see companies like benefit from even near mine exploration that they haven't done in the past. So there's almost like this built up kind of pipeline, or almost like inventory of exploration, your pipeline of exploration that the companies are doing now, and that will help them grow organically instead of having to acquire.
Chris, you oversee the $2 billion fund under Gabelli here, tracking precious metals and the mining companies. What can you tell us about what kind of inflows you're seeing, where it's coming from? Is there new interest here?
Of that $2 billion, around, or it's a little bit less than $2 billion, but of that amount, around 2/3 is in closed-end funds. So the closed-end funds are fixed capital. In the open-end fund, the Gabelli Gold Fund, which is a long-only gold mining fund, that we've been seeing like outflows this year. Last year, we saw inflows as the gold price was going up. And this year, we've been seeing some small outflows as the gold price has been going down. And again, it's interesting. On a good day for gold, we'll see a little bit in. On a bad day for gold, we'll see a little bit out. But by and large, this year, we've seen outflows.
Okay, interesting. Let's dive a little deeper. How much of that do you think is correlated to Bitcoin?
Bitcoin? I don't think much. I mean, because it is happening on days when, again, like the flows have been pretty well correlated to changes in the gold price, So to the extent that, or to the degree that the gold price being down on a certain day is because Bitcoin is up, then maybe, the outflows have to do with Bitcoin. But I don't think that gold is really trading with Bitcoin. I don't think there's a real correlation between gold and Bitcoin. Bitcoin's been just on a a straight line up, hockey stick up.
Yeah, I guess the question is the money leaving the gold industry, right, and heading in towards Bitcoin. I mean, this has been a common narrative we've heard, how that's what's causing the pressure on gold. So I was interested to get your thoughts from an inside perspective, that if that's what you're seeing.
I mean, we're we're getting a lot more questions. Like when I talk to advisors and things, like, I had a call with Morgan Stanley advisor a couple of weeks ago, who manages over $1 billion for high net worth clients in Southern Connecticut, and I had a call with the team, and they were asking me about gold, and of course the topic came up at Bitcoin. Do you think Bitcoin is taking some of the action from gold? And so, seems like every time now that I have a discussion with a client or a prospect, that topic comes up. So it must be taking some, kind of some interest from gold, but it's not like I'm not getting calls from people who are saying, yeah, I'm not interested in gold. I'm out. I'm in Bitcoin. Now, that being said, if they're out, then they're out. They're not talking to me. So I figure, I don't know. I mean, there might be some effect from Bitcoin, but it's not apparent.
I'll get back to Bitcoin in a second, but I guess just to round up our mining talk before we talk more gold price, sure. What would a Newmont Barrick merger mean for the industry, Chris?
I think what would it mean for the industry? I mean, it would mean that there would be more assets that were being sold. So there'd be more opportunities for the mid-tiers to buy some assets like we saw. We benefited in the Gabelli Gold Fund from owning Teranga, which bought an asset from the merged Barrick Randgold. Right. We're benefiting from Evolution, having bought Red Lake from the merged Newmont Gold Corp. So I think we'd see that. I mean, we'd see the Nevada Gold come together under one house. I mean, but that's not really, right now it's managed in a JV structure. I mean, maybe I think what would be powerful would be, and you don't need Barrick and Newmont to merge to do this, but a powerful entity in the gold mining sector would be a standalone Nevada Gold. So I think that Barrick and Newmont should IPO a portion of that and daylight value for Nevada Gold.
Interesting. What are the chances of that happening, you think?
I think low. I don't think they want to do it. They want to keep, the free cash flow in-house. They want to.
Yeah. Looking at the gold price now, last time you're on, you're telling me how, look, at the end of the day, $10,000 gold is the end game, right? It's not this year, obviously, or next per se, but eventually your target is $10,000 gold. With what's going on, on the Federal Reserve front, we saw CPI numbers coming in hot. There's talk of, perhaps we'll be heading towards more of a higher interest rate environment. What's the narrative for gold here now for you?
Well, I think the narrative is still the bear case for gold over the next 6 months to the end of the year is a Goldilocks, is the economy running not too hot and not too cold, but just right. So it was disappointing yesterday to see that kind of CPI print and gold not react well to that high CPI print. But I think that gold is still trading as a negatively correlated to bonds, essentially. So as yields rise, bond prices go down, the gold price also goes down. So I think that what we saw was the high CPI print, rates rise, and the gold go down. So I think that that's still the trade. But I think that if the inflation persists, you're going to see demand for gold pick up and you're going to see the price go up.
I think that's the frustration for most investors, is that basically since August of 2020, you can make the case that gold has been in bearish territory, and that yes, it hit a nominal high in the year of a pandemic, the black swans of all black swans, but still paled very much in comparison to assets such as Bitcoin. Should gold be much higher than where we are today, Chris?
I mean, I think that should it be? I mean, I think that the answer is probably yes. And we can see that, frankly, from when we look at websites, like retail websites that are selling physical gold, they're charging huge premiums now for 1 ounce gold coins, 1 ounce gold bars.
Yes.
They're frequently out of stock. Yeah. So we're seeing that there's a lot of demand amongst individuals who want, and like a couple of weeks ago, we saw Sam Zell say that he's buying physical gold. So we're seeing demand as a hedge against inflation, currency debasement amongst, all the way from retail, poor people like me buying 1 ounce coins, all the way to like Sam Zell, the billionaire who might be buying, who knows, maybe he's buying $10 million, $20, $30 million worth of gold, physical gold. So if we now what's holding gold back relative to that big tailwind for the price is the algos and the hedge funds and the whatnot that are using it as a way to trade interest rates as just a correlation to rates, and so that's what's been driving the price down this year.
So are you sticking to your $10,000 call?
Well, yeah. I mean, again, it's something that it'd be 10,000 or higher. Actually, would be what would happen if there were this currency debasement in the United States, which is it seems like that's what we're heading towards. I mean, it seems like more and more every day. Again, it looks like more and more every day we're kind of going in a direction that's more and more like a Argentina, Venezuela kind of situation, and that's it might sound alarmist,
yes.
and it might be an exaggeration to an extent right now, but we're seem to be heading down that path in terms of borrowing more, distributing more to individuals, causing inflation, a weak economy. We're still relatively high unemployment. People aren't going back to work. So these crazy things that we see in some countries that we as Americans say crazy is kind of happening here. It's starting to happen, moving that direction. So again, if it keeps going that direction, the price will be higher than 10,000.
I think the difference, though, comparing to countries like Argentina or Colombia, is that the Fed here can just keep printing money, right? Whereas you can't really have that situation in Colombia. So that will save us from going down that road?
I don't think so, because what could happen here is that if you have a situation where we have inflation, so say we have inflation now and the economy is still weak, still relatively high unemployment, and the president and the Congress move more stimulus through, then there's more inflation and the economy is a little bit weaker, and the Fed and rates go too high, right? So the Fed prints money to buy bonds to keep rates low. Yeah. Which but that inflation keeps getting into the system, it can get out of control. So it doesn't matter if that's kind of the reason why it can get out of control.
I agree with you here on that point. I already feel that the inflation is out of control.
Right, but if it gets completely out of control, the Fed keeps printing money, and this cycle continues, right? And it's, well, wait a second, what do we tie our currency to? So that the prices don't get out of control. We need to anchor it to something, and that'll be gold, and that'll be at a price higher than $10,000. Gotcha. 10,000 is something to throw out there, but it would have to be a scenario where the U.S. government would say, wait a second, again, this is down the road, but it's happened in other places. So this is, and it's not definite that it'll happen here, but like a gallon of milk all of a sudden is $500. So how do you, it starts out at 5, then it goes to 10, then it goes to 100. Then it's, well, wait a second. How do we anchor the currency to something? And it's, you say, well, if you have X number of dollars, you can exchange them for 1 ounce of gold.
Right.
And because we own 8,100 tons of gold. So that's something that the U.S. government can tie the currency to specifically.
Chris, final thoughts. I want to bring it home here with Bitcoin.
Okay.
And gold. So I'm bringing it back to this because I think you were one of the first experts I ever interviewed that really came out harsh, had some harsh words on, I mean, this is years ago.
Yeah.
When I was on another outlet, what you were coming on saying, look, Bitcoin is corrupt and gold is not, because it's a creation of God. And, the gold bugs loved you for that. They were rejoicing. And you obviously got a lot of hate mail from the Bitcoin camp, and you love that too. Have you since changed your stance on that at all? Or?
I mean,
you know, a little softer towards Bitcoin.
Yeah. I mean, you know what? When I said that, okay, so what I said was that, just to be clear, what I said was that Bitcoin is corrupt, and that was during a period of time when we were seeing all these forks off of Bitcoin, right? And those forks have stopped, partially because I think it was driving the Bitcoin price down, and I said, it's corrupt because it's a creation of man. And so they're corrupting it. Men are corrupting it. You know, men are inherently corruptible. And whereas gold can't be corrupted in any way, you can't create another ounce of gold from an ounce of, because gold is a creation of God. God put gold, certain amount of gold in the ground, and it's there. You can't create another one off of it. So it is the true currency. And I still believe that. Now, that being said, if I had been short Bitcoin when I said that, I would have lost my house, right? Because it's gone up probably, you know, I don't know. I think maybe Bitcoin was like $5,000 or something like that when I said that. So, I mean, you know, these things can kind of keep going, and Bitcoin is a store of value. I mean, it is rare. But we're seeing, again, like this Dogecoin nonsense and all this other crazy stuff. It just shows that, like, this kind of, you know, things can stay, quote unquote, you know, corrupt or irrational or whatever for a very, very, very long time. And you could lose lots of money if you just pound the table. And, you know, I was not short Bitcoin, actually. and I wouldn't short it now. So
I picture Frank Juster on a hilltop rejoicing at your statements right now. Like, yes, yes, Chris Mancini.
That's nice.
Last point, just on Bitcoin. When we see moves, you know, Elon Musk coming out saying Tesla's not going to be accepting Bitcoin, it's, you know, concerns with environmental issues surrounding it. The fact that that it can move, it can correct so much, just based on a statement, is that indicative of a bubble? What does that mean?
I think that it is. Yeah. I mean, I you know, the fact again that you know, you hear about these watch parties for Elon Musk on Saturday Night Live talking about Dogecoin and, you know, waiting for it to pop. And apparently, you know, and again, I'm not an expert, so I don't want to, you know, people comment, well, he's not an expert, why should I say? But again, so fine. But my understanding of the Dogecoin is that it was created as a farce, and like 20,000 coins are created every minute or something nuts like that. So like the fact that it could go up so much and that there could be so much demand, it just shows, yeah, we're in this crazy stage of like mania, bubble, tulip kind of mania that we you know, remember reading all the stories about in history in the past. I mean, you know, but again, Bitcoin I think is different from the others, but there is so much speculation and hype in Bitcoin specifically now that I still wouldn't buy it.
All right, you heard it here first. Chris Mancini sticking to his love of gold.
Correct.
Still no love for Bitcoin. I always appreciate when you come on. Stay safe, keep well, and we'll see you soon. Okay, Chris?
Okay, thanks, Daniela.
And thank you so much for watching. Be sure to stay tuned to StansberryInvestor.com and share us where you watch us. That's it for me. I'm Daniela Cambone.